Right, so as I said, Happy New Year. Thanks very much for FX Street. This is the first session I've done for the year, so hopefully it's the first of many good performances. The first thing that I want to discuss today is, to be fair, I'm going to talk about the mind initially and perception. Personally, it's something that's quite close to my heart. I'm personally quite interested in the mind, perception, reality, and this is going to ultimately link in with what we're going to talk about next. And I just want to go through literally just a few optical illusions. I mean, basically, what do we see? I mean, as you know, the optical illusions suggest, to see a man playing a horn or a woman's face, or can you see both? Are you able to flip between one image or the next? And the reason why I'm talking about this is it's quite important because what we can do is we can get into the habits, and again, just go to some other illusions. We can get into the habits of literally seeing what we want to see. So the reason why I'm pointing these optical illusions out is, what do you see? Do you see a lot of horizontal lines, or do you see wavy lines? It's just an optical illusion, but what can you actually see? What is actually happening? Do we see the illusion, or do we see the reality? So when we look at the charts in a moment, this is something that I'm going to try and illustrate with the charts. And tying into the three basic questions that I typically talk about is, where's price now? What's it doing? These are the facts. We're not trying to convince ourselves of what might be happening or what could be happening or what should be happening. We are simply stating the facts. So what are the facts? Well, there's possible scenarios. Am I being, with this illusion, to just follow on with the example, do I see horizontal lines or do I see sloping lines? What is actually happening? Are you deceiving yourself, or is your mind seeing something that isn't actually there? And the same can be said when we look at the chart, and we'll do that in a moment. Just want to go through two others. This is quite an interesting one. Again, what do we see here? How many horses do you actually see? It's quite an interesting illusion. So can we all see a picture of horses, basically? Well, how many horses do you see? Is there an illusion? Can the mind, at first glance you might say there's 3 horses, but hold on, at the next glance, 1, 2, 3, 4, 5, is there 6, 7, 8, 9, 10? How many horses are there? Can everyone see the image? Let me just stop and restart. And everyone see the image now? Okay. So basically, one of the things we're looking at is, what do we actually see? Do we see several horses? Do we see 3 horses? Do we see 5 horses? Do we see 10 horses? Is there just 1 horse? But again, the mind can play tricks on us. What do we see? Typically, we make our own reality. Reality does exist. What changes is our perception of reality. The way that we view things will dictate the action that we take. And as traders, this is quite important, because if we see things that aren't actually there, we can make mistakes. Let me just go back to number 3. So can everyone see wavy lines, optical illusion, horizontal lines? No, so sorry about this, folks. I'm not sure why the projection's not working. Okay, so I've just restarted the thing again. Right, okay, so this is the last one we're going to look at. I do have several others, but I think with the small issues. But basically, what do we see? Do we see straight lines, or do we see wavy lines? Do we see sloping lines? What do we actually see? Do we see reality, or do we see our perception of reality? Yeah, absolutely. So do we see our perception of reality? So this is quite important. What do we actually see? So this ties in nicely with the 3 basic questions. Let me just get the charting program off. So hopefully we shouldn't have any further disruptions. So I'm going to be on to the charting. Okay, we should be on to the charts now. We're not going to be moving away from this now. And everyone see the Euro-Yen 240-minute charts? Excellent. Right, okay, so what do we see? I mean, what is our perception of reality? That really is what we're trying to say to ourselves. 3 basic questions. The first rule of trading is to have a business plan. The business plan that I have surrounding my trading patterns and setups is to follow a methodical and logical approach. And that is on the basis of 3 questions. Where's price now? What's it doing? How can I get involved? The first 2 of those questions deal with the facts. What is actually happening on the charts? Not what I think is happening, what might happen, what could happen. I'm dealing with reality. I'm trying to filter out what I think from what is actually happening. So my perception of reality, I'm trying to disregard, and I'm trying to look at what is actually happening by answering these 2 questions. So again, coming on to a more trading context, is what do we actually see? So with the price action sequence, what do we actually see? Is price trending or is price ranging? Tell me what you see. What do you see? Is price trending or is price ranging on this section of the chart that we can see? Ed says the range. Chris range, trending, Michael trending down. There's no right or wrong answer at this stage. It's just what do you see? So anyone who knows the price action sequence, what do we see? Is it trending up? Is it trending down? Or is it sideways? Is it range bound? Well, we can put some labels on these, and we'll go through this in a bit more detail in a moment. But we can see most recently, we've got the higher swing high there, higher swing low, lower swing high, lower swing low. But hold on, price hasn't gone below that lower swing low most recently to dictate a direction bias to the downside. Let's count the sequence. So lower swing low, lower swing high, higher swing low, higher swing high. So if price goes with the higher swing high, then I'll be biased to the long side. So I'm neither biased to the short side or the long side. And again, you could argue the toss that we're actually got a more classically defined range. Again, price doesn't look like it's trending. More classically defined range of multiple touches of the highs and multiple touches of the lows. You've got multiple touches of the lows, multiple touches of the highs with a attempted false breakout. So a more classically defined range, double touch the highs, double touch the lows. Is that the reality? Is that what is actually happening? Now let's change the picture. Let's change the view that we can see. Let's take a look at some more data. Now what do we see? Is that a clearer image? Can we see more information on the chart? Of course we can. But do we see more data on the chart? What does the chart tell us now? Just eyeballing the chart. What do we see? Is price trending or is price ranging? So our perception of the facts, our perception of reality has changed because we're looking at a different amount of data. Can everyone see the different amount of data we've got from the 25th of November? Is it not refreshed? I'm not sure why this is happening, folks. Just bear with me. Okay, what's that like? Okay, that should have updated now. Okay, so what do we see now? Do we see a different view? Has our perception of the same set of data changed? Yes, no, maybe? Yeah, of course not. Our perception has changed because we're looking at a larger set of data. So now, by trying to take in the larger picture, by looking at more information on the charts, we can start to try and find out what is actually happening. And we've got a pretty good data set at the moment. We've got the last 2.5 months worth of data, and we can see that that small section of the chart that we were looking at, it didn't give us a clear indication of what was actually happening. Price was making lower highs, lower lows, making high highs, high lows, making lower highs, lower lows. It wasn't giving us a clear indication. But what we can see with the price action sequence, and we'll go into this in a more detail in a moment, with the price action sequence, we can see that the last higher swing high was there, the last swing low, it's actually a lower swing low, but the last swing low was there, and price since that swing high and swing low, it hasn't actually made a new high or a new low on the movement. It's not made a higher swing high, it's not made a lower swing low. So it would be fair to say that originally we had a potential range marked off between these two locations that I'm just marking off now. Would it be fair to say that, hold on, the reality, our perception of the data that we've got has now changed? Because we're looking at more information, and the range is actually between those two levels. Can everyone see these two levels that I've just marked off? So we've got two levels marked off now. So this really is all about perception and reality. What is your perception of the facts? Depending on the amount of data that you look at. So you need to have, I'm really sorry about this, folks. I'm not sure why it's not updating. There has been a new upgrade to Hotcom, but it doesn't appear to be playing ball. Okay. Right, okay, so we've got horizontal line. So we've got the, let me just recap. So we had originally, looking at that small data sets, ranges marked off here, and we've now got the larger ranges marked off. So our perception of reality is changing because we're looking at more information. We've got more information to try and make an educated or a more constructive decision based on what is actually happening on the charts. So again, the first part of the three basic questions, this really is one of the foundation stones to the sequence, the process of how I look at the charts. Where's price now? What's it doing? Deal with the facts. Do your analysis. Relative to the strategy that you're using, what is actually happening on the charts? What are the facts? Not what you think might happen and what it could be. I'm not saying that you should, well, it could be a range, it might be a range, it might be trending up, it might be doing this. We're not interested in on ifs, buts and maybes. We're trying to deal with, at this stage of the game, we're trying to deal with facts. What is happening on the charts? You can't deny these things. These are the facts. Not what you think will happen, but what is happening. Does everyone understand the point I'm trying to make? So our perception is dictated by what we think. So let's try and avoid initially what we think is or might happening and deal with the facts. And that basically means we need to do a little bit of homework. What is happening on the chart? And then we'll deal with the last part of the three questions, which is how can I get involved? That's the time we can think about scenarios. What might happen next? How can I get involved in the market if certain events unfold relative to my trading strategy? Does that make sense? Everyone happy with the logic? So three basic questions. Where's price now? What's it doing? How can I get involved? Any questions so far, folks, on that particular aspect? That really is the process that I go through on each and every trading opportunity. Every time I look at a chart, that is the process that I run through. Right, okay, so let's, can everyone see four charts now? Can everyone see four charts? Thanks very much, folks. Ed, Mike. No, I'm really apologise for this. I'm not sure why it's not updating. Really don't know why it's not doing it. Just bear with me a moment. Right, okay, so look, should be looking at pound, dollar, 240 minute chart. It's just a random part of the chart. It makes no difference. So what we're looking at now is a 240 minute chart. Again, for this next stage, I mean, some of the old hats at the room for these presentations probably realise what I'm going to go through next. We're trying to deal with the facts. The facts are, is price going up? Is price going down? Or is it going sideways? What are the facts? For some people, it'll be easy to say, or easy to see rather, that price at this point on this part of the chart, it's in a downtrend. It started off at the top left, it's finishing at the bottom right. It's this section of the chart, it's in a downtrend. But how do we know it's in a downtrend? What dictates a downtrend? When price is making lower swing highs, lower lows, it's going down. When price is making higher swing highs, higher swing lows, it's going up. When price is making neither new swing highs or new swing lows on the movements, it doesn't have to be all-time highs or all-time lows, just on that particular movement. If it's not making neither new highs or new lows, then it's going sideways. There's only three ways the market can go, and that really makes our options of dealing with the facts of what is actually happening on the chart. That makes our job a lot easier. So swing high then. So basically we're going to go through the price action sequence. This is the foundation stone of everything trading related that I do. So we've dealt with the process, the foundation of the process of dealing with the facts, then think about what might happen relative to strategy. Three basic questions. Where's price now? What's it doing? How can I get involved? So the analysis part, this is the foundation stone of everything I do, whether it be a fib retracement setup, whether it be a range breakout, whether it be anything that I do. Everything is based on this price action sequence that we're about to go through. So price action at its most basic level is the fluctuation of price movements. With every price fluctuation that goes up and down, it puts a price on the charts. Now, in its raw level, the raw data can be pretty meaningless until we start to put some definition. The charting software that we all use can split and does split that raw information into manageable chunks. For example, this chart that we're looking at right now is the 240-minute chart. So this is a manageable chunk of raw data. Every 240 minutes, a new bar is formed, regardless of whether there's been any price action movements. A new bar every 4 hours is formed. Same with a 60-minute chart, a 15-minute chart, a 5-minute chart, or a daily chart. You know, it manages that information into something that is more recognizable. So, still at that level, we've still not got any definitions for us to play with to still make the charts readable. So what we just need to start doing is start building some definitions on the chart. So a swing high, for example. Again, can everyone see the high that I've marked off? Is it updating properly? Right, okay, so the swing high that I've just marked off here. What makes this a swing high? Well, first of all, it's a high. Yeah. It's a bar preceded and succeeded. Okay, we've got, I'm just going to put some random things on the chart for a moment. Is the chart updating for us, folks? Should see 4 red arrows on the chart. Excellent, excellent. Right, okay, so we can hopefully get on without any interruptions now. Okay, thanks very much, Maud. Right, okay, so we've got swing high. So thinking about the price action sequence, we've got the raw data, the charting software that we use breaks down the raw data into manageable segments, puts it into typically minute charts. On this particular chart we're looking at a 240-minute chart. It's still pretty meaningless until we start putting some definitions onto the chart. So thinking about swing highs and swing lows, when price is making lower highs, lower lows, lower swing highs, lower lows, it's going down. So what is a swing high? A swing high to me is a bar preceded and succeeded by lower bar highs. It's a 3-bar combination. So bar preceded and succeeded by lower bar highs. A swing low, let's pick a random one. Swing low is a bar preceded and succeeded by higher bar lows. So we've got swing lows, swing highs. So we've now got a definition to start looking for this lower high, lower low downtrend, higher high, higher low uptrend, and if it's making neither new highs or new lows on the movements, then price is range bound. So what does this look like? Well, on the left hand side of the chart, I'm not going to mark them off because it will take a while. I've already got a section of the chart prepared. So when price is making lower swing highs, where the cursor is now, lower swing highs, lower lows, price is trending down. When price is making neither new highs or new lows on a movement, then price is trending. So what does that, price is ranging. So what does that sideways movement look like? So basically we've got the last swing high just marked off there, the last swing low, bars preceded and succeeded by higher lows, a bar preceded and succeeded by lower highs. So for me, for a range, for a consolidation to develop and be confirmed, I need to see a lower high and a higher low, and we've got one there, a lower high and a higher low that is within the previous swing high and the previous swing low. So this vertical point of the chart there that I've just highlighted, this vertical point of the chart, that point of the chart, price is confirmed for me as being in a range. Now what I'm interested in is the extreme boundary of that support and resistance. Personally, I'm not too concerned with the name of the pattern, whether it be an asymmetrical triangle, descending, a wedge, whatever you want to call it. It's a consolidation. That's where price is consolidating. That's a fact. You can't deny it. To be fair, who cares what it's called? Call it pink elephant. Knowing the name of it is not going to make you a better trader, as far as I'm concerned. People might agree, people might disagree, but it is not going to make you a better trader. If you know what that, most people will know and can know a lot of information about technical analysis. But does that, having that knowledge and knowing the name of everything, does it make you a better trader? It might do, it might not. Depends on the individual, really. But in my view, it doesn't matter what it's called. So we've got this pink elephant as a range. It doesn't matter what it's called. What are the facts? Again, coming back to the reality, perception and reality. What is actually happening? At this point of the chart, we've had a range confirmed. So if you're a trend trader or you're a range trader, would this information be important to you? Whether you're, as I say, whether you're a trend trader or a range trader, would knowing when price is trending be important? Would knowing when price is ranging, would that be important to you? Do you think that would be an important piece of information? Of course it would. Of course, absolutely. Again, so even with this knowledge, even if you say to yourself, hold on, I'm not really a trend trader. I'm a range trader. Personally, I'm a trend trader. But what if you're a range trader? You're looking for consolidations, so you can apply a range trading strategy. That might be something. That might be your style of trading. It's not mine personally, but that might be yours. So it would be important to know when price is consolidating. That would be a really key piece of information. Similarly, if price is trending, you would want to know, because you're a trend trader, you want to know when to apply your trending tools, because we've got tools that we can use for trending, we've got tools that we can use for trading. Thinking about indicators for a moment, MACD, moving average convergent divergence. It would be important to use the MACD when price is trending. It's based on moving averages, which is a trending tool. If price is range bound, you might say to yourself, well, hold on, price is range bound, I'm going to use an oscillator tool, because price is oscillating, it's range bound. So you can now, at a very basic level, know when price is trending, when price is ranging, and more importantly, relative to your strategy, whatever tools that you use, it doesn't really matter, but whatever tools that you use, you now know when to use them. When price is trending, trending tools. When price is ranging, ranging tools, oscillators. A key piece of information. So swing high, swing low. So price making lower highs, lower lows. Let's just go through a few examples. I've got a chart prepared. Or I've got several charts prepared actually. So let's just think about the price action sequence. We're just scrolling along the chart. So again, the sticking point for this analysis is the turning point. When does price? So this is what I'm going to focus some time on now. When does price stop going down and start going up, or vice versa? When does it stop going up and start going down? Well, we know the definition. We've got our rules for finding swing highs and swing lows. When price is going up, it's making higher highs, higher lows. When price is going down, it's making lower highs, lower lows. So if price has been trending down, this bottom right-hand portion of the chart, then the first point in time that price makes higher highs, higher lows, that would be a bias change. That's your 1, 2, 3, depends on how it unfolds. That's your 1, 2, 3 reversal or your 1, 2, 3 pullback. Sorry, question from the room. In identifying the higher high, higher low, lower high, lower low, do you consider every peak on the chart? Typically, I will consider every peak on the chart. There's only probably one exception, and that would be an inside bar. We're going to come on to that. I'm going to come on to that later for you, Din. Actually, that's just another little aspect, because that same question came up in my own trading room this morning, because we had a few instances where the sequence wasn't too clear. So we'll go through that example in a moment. But let's just deal with what the bias changes look like first of all, and then we can compare the two. So pound against the dollar, 240-minute chart again. Typically, for me, this is a chart that I will look for the direction. I will take my direction bias. Which way is it going? If price is trending up, I'll be looking for longs. I'm predominantly a trend trader, trend and breakout trader. So I'll be looking for longs if price is going up. If price is going down, I'll be looking for shorts. If price is range bound, typically I'll step aside. Price needs to be I need to be quite specific for me to operate a range trading strategy, and they don't often develop. A 1, 2, 3 reversal and a question from the room. What's the difference between a 1, 2, 3 reversal and a 1, 2, 3 pullback? Again, we're going to go through this in a moment, but basically the 1, 2, 3 reversal and a 1, 2, 3 pullback. So we'll go through examples of that as I go through the bias changes I refer to those names, the 1 to 3 reversal, as a bias change, just for your reference. So we'll go through those examples and we'll see the difference between the two in a moment. So the first point in time that the direction changes is when it stops making lower highs, lower lows, and starts making higher highs, higher lows. This is the first point in time. Again, let's just deal with the facts. Let's say what we see on the chart. Lower swing low. Lower swing high. Sorry, lower swing low, lower swing high, higher swing high. So lower low, lower low, higher, sorry, lower low, lower low, lower high, higher high. Can everyone see this? So look, it's not the perfect example, and I've chosen this one for a reason. We've got an outside bar here. So what the next question is, can we have an outside bar? Can we have a swing high and a swing low on the same bar? Is it not updated? Okay, is the chart updated now? Okay, so can we have a swing low and a swing high all on the same chart? Of course you can. The definition of a swing low is a bar preceded and succeeded by high lows. The definition of a swing high is a bar preceded and succeeded by lower highs. 3-bar combination. It's just a swing high and a swing low has developed all on the same bar. So say what we see on the chart. We've got lower swing low, lower high, lower low, higher swing high. So price is changing round. The key for this is a higher swing high. When price is making higher highs, higher lows, it's going up. When price is making lower highs, lower lows, it's going down. So the first point in time that makes those higher swing highs or lower swing lows, then we've pretty much got an indication of a direction bias. So price then needs to move above that higher swing high. Is the chart updating, folks? Just scrolling through. All right, let's just get that on the chart. No, okay, right. Okay. I'm not sure why it's updating. Okay, so should have several swing highs, several bias changes marked off. Should have several swing highs and lows marked off. So the bias change that we were just looking at a moment ago is over here on the left-hand side of the chart now, just for your reference. Can everyone see the updated chart? Okay, brilliant. Right, okay, so again, I've got this chart prepared, so we don't need to label each and every swing high. I've literally marked off the turning points. So at this point of the chart, price would need to go through that higher swing high. So all we're going to do with the price action sequence is count each and every swing high and swing low. You don't need to mark them all off, but you do need to be aware of them. So say what we see on the chart. Higher swing high, higher swing low, lower swing high where the cursor is, higher swing low. So price making a high swing low and a lower swing high within the previous swing high and the previous swing low. So if price is making high lows and lower highs within the previous swing high and the previous swing low, what's price doing? It's ranging. So at that point of the chart, price is ranging. Price moves out of that range bound location. Again, say what we see on the chart. Price makes a lower swing low. So the range or the consolidation period is broken. If you want to put the label on that, it's an asymmetrical triangle. Again, who cares what it's called? Price is ranging. We know that that's the case. So we can trade a break of that range, or we can trade the reversal of support. We can apply a range trading strategy. Price is at support. I'll be looking to either buy support, sell resistance, or sell the break of support on a breakout, or buy the breakout of resistance. But then, just think about the price action sequence. Say what we see on the chart, where the cursor is: lower swing low, lower swing high, higher swing low, higher swing high. Can everyone see this? So this is your 1, 2, 3 pullback. So this would be a buy change. So if price goes above the higher swing high, I'll be in a newly established uptrend. Does that make sense? Say what we see in the chart. So it was ranging, very briefly, made a lower swing low, lower high, higher swing low, higher swing high. Price goes above that higher swing high, the facts are price is going up. That's the first point in time where the cursor is that price is going up. it is making higher highs, higher lows. They're facts. You can't deny them. Does that make sense? Everyone happy with that so far? So this is also that low, lower high, higher low, higher high. That is your 1, 2, 3 pullback. Another way of saying it, 1, 2, 3 Ross hook. Some people know this is a 1, 2, 3, 4, 5. 1, 2, 3. Some people know this is a multi-point reversal. This is trading the first pullback after the failure to make a new low. Another way of saying it, the earliest reference I can find to this pattern is 1880, and it was referenced trade the first pullback after the failure to make a new low, or trade the first pullback after the failure to make a new high. That is what this pattern is. This is an old pattern. And this is basic price action reading. To be fair, Amaya, in this case, price did just break that previous swing low. It did break out the range. But for a direction bias, based on the larger time frames, again, one of the things that we talked about this morning in my own room is I'll mark off each and every swing high. If price is range bound and it stays within the range location, those extreme boundaries of support and resistance, then price is range bound until it breaks out. So price at this point here, that first lower swing low, price did actually break out, so then we can start counting the sequence again. Ed, never used it. I don't know how it's worked. Don't know how it's worked out, to be fair. I'm going to be totally upfront. So again, let's just follow the sequence. Say what we say: high swing high, higher low, higher high, lower low. So what would be a 1, 2, 3 reversal pattern? So say what we say: higher swing low, higher swing high. We've got the breach of a previous swing low, lower swing low. So if price went lower than that lower swing low, that would also be a bias change. Now this is one that didn't confirm, but this would be your 1, 2. The 3-point never developed, didn't get that lower high. We'll look at one in a moment. But this would be one instance where that lower swing low, it didn't trigger the bias change. So price is in an uptrend until a newly established bias change. Say what we see in the chart. Lower swing low, higher swing high. The uptrend is resuming. Higher swing high, higher low, higher high, higher low, lower high, lower swing low. There's your direction bias. High, higher low, lower high, lower low. Price goes below that lower swing low, you're in a downtrend. Now in this case, price went into a range. A high lows, lower highs within the previous swing high and the previous swing low. Direction bias did trigger as well. Say what we see in the charts. Lower swing low, high swing high. It looks like that short-lived direction bias, to be fair, that directional bias change was short-lived. So this is a 1, 2, 3 pattern now. So this next part of the chart here, we've got higher swing high, lower swing low. If that swing low where the cursor is lower than the previous swing low. So this is the 1, 2, 3 pattern. We've looked at the 1, 2, 3 pullback, 1, 3 Ross hook, whatever you want to call it. So when do you trade the 1, 2, 3 pattern? High, lower, low. So on the breach of a previous swing low, I can trade the first pullback. High, lower, low. The lower high will typically still be developing. So we've got high, lower, low. Lower high in real time will usually still be developing. So if price goes below that lower swing low where the cursor is, then our newer direction and bias to the short side. So that would be trading the 1, 2, 3 pattern directly. But to trade a 1, 2, 3 pattern, I would need to see a breach of a previous swing low or for longs a previous swing high. Does that make sense so far? Does that make sense? So the difference between trading a 1, 2, 3 pattern and a 1, 2, 3 pullback depends on how the high-low sequence unfolds. If I've got the breach of a previous swing low or the breach of a previous swing high, then I can basically trade the first pullback. So that would be the 1, 2, 3 reversal pattern. By having that breach of the previous swing low or the previous swing high, that tells me that the price action is telling me that either sellers, if a breach of a previous swing low, sellers are coming into the market. If a breach of a previous swing high, buyers are coming into the market. It might just be a stop run. We don't know that. But if we get that breach of that higher swing high or the lower swing low, that's the key. That is the key to the sequence. So we need to see that higher swing high, lower swing low, and then if price goes lower than that lower swing low or higher than the higher swing high, then that would be dictate the new directional bias. Question from Ed, how do you pick where on the chart to start your price action? Okay, pick a random point. Doesn't make too much difference. I mean, sometimes you can just, you can obviously say, I mean, sometimes the direction will already be established. So if the direction is already established and price is already trending, it's usually easy to see. What I tell people in my own trading room is really and truly just to follow the sequence of events. You only need to mark off the last two swing highs, the last two swing lows, because that's all we need for the bias change or for a rate or for a consolidation to be confirmed. So if price is still making lower highs, lower lows, just by marking the last two swing highs, two swing lows off, then it's going down. If the last two swing highs, two swing lows are making higher highs, high lows, it's going up. And if it's not making either higher swing low or, sorry, if it's making a lower swing high, higher low within the previous swing high and the previous swing low, then it's range bound. So really we only need to see the last two swing highs and two swing lows. Until you get used to it though, best advice is to just mark off the last several to get basically familiar with the price action sequence. That would probably be the best advice. Again, another training tip, if you like, that you might want to use is print several charts off. Just get some hard copy charts, sit down with a pen and paper, and just mark off all the swing highs, all the swing lows. And then go back to the chart and just mark off the phases of the chart. Is it in an uptrend? Is it in a downtrend? Or is it range bound? It's a really good exercise to do. It's what I suggest all my students to do. That's one thing to do. Right, okay, so I've got a few minutes left. So we said we'd cover what do we do? Do we mark off all the swing highs or all the swing lows? So that was one thing that we need to look at. Let's take a look at the pound yen. First off, while I'm just getting this, is the chart updating? Is it updating? Okay, should see 4 charts now. 4 charts. Okay, so I was asked the question earlier, what's the lowest time frame that I will do this price action sequence on? The lowest time frame that I'll do this on is, for me, the 89-tick chart. They're pretty good with TradeStation, not so good on other charting platforms. So if you don't have TradeStation or access to 89-tick charts, a 2 or a 3 minute chart will give you a similar effect. Michael, yeah, sure, I'll go to that in a moment. So a question earlier is, do I mark off each and every swing high and each and every swing low? Typically, yes. There's only really 1 or 2 instances where I won't mark off all the swing highs and all the swing lows, and it's just one of those, experience things. Let me just update the charts and refresh it. Right. So what we have, can everyone see the arrows? Bottom left-hand chart I'm looking at. This is the 89-tick chart, bar charts. Can everyone see the arrows that have just marked off there? Okay, thanks very much. So what I was looking for at this point of the chart, so just to go through a trade I was looking for, again, the direction bias, this is my typical looking setup. Direction bias is up based on the 240-minute chart. Price is making higher highs, higher lows. Fact. Potential direction of bias, say what we see, high, higher low, lower swing high, and a potential lower swing low. That's not yet confirmed, and the direction bias hasn't developed yet. So until that happens, I'm looking for a long trade. I'm not going to go through the Fib retracement setup. I don't have time. There is a video on the archives if you want to look at the Fib retracement setup. But I've identified a level on the chart that I want to take a trade on, basically the 50% retracements. So looking for the bias change on my lower entry time frame. So on the 240-minute chart, I'll use this for direction, but I can still use this exact same pattern to trade with. So tying this in with, do I mark off each and every swing high and low? Yes, I do mark off each and every swing high and low. So what we see, we've got low, lower swing low where the cursor is, lower swing high. That was developed with an inside bar. So we've got lower swing low, lower swing high, and then another inside bar, higher swing high. So we've got swing high, and what you can see is there are no, at this point of the chart, bottom left-hand chart, there are no higher lows. And these swing highs were developed really with inside bars. What I need to see, again, think about the sequence. When price is making higher highs, higher lows, it's going up. When it's making lower highs, lower lows, it's going down. So it's making higher swing highs, but it's not making higher swing lows. So what I can do effectively is discount the inside bars. It doesn't happen too often, folks. We just happen to have two good examples this morning. Let me just refresh the charts. We just happen to have two good examples this morning, so I can discount those inside bars because I've got no higher swing lows. So that would be the only time that I would just think twice about the counting sequence. So now what we can see, we've got lower swing low, lower swing high, and waiting for that higher low, higher high sequence at this portion of the chart that we've got highlighted. So then, that's the pricing sequence. Very quickly then, let me just go back to the 240-minute chart and just quickly round up the price action sequence. Let me find a suitable portion of the chart, and I will just recap. And let me just refresh the chart. And I will just recap the bias change sequence. So bias changes. The price action sequence is when price is making higher swing highs, higher lows, it's going up. When price is making lower swing highs, lower swing lows, it's going down. When it's making neither new swing highs or new swing lows on a movement, price is range bound. So thinking about the bias change, the price action sequence. So when is price making lower highs, lower lows? Let me just mark one off there and refresh the chart. Right, okay, so starting off on the left-hand side of the chart, top left-hand side of the chart, the bias change, what I term as the full bias change, we've got high, high swing low, lower swing high, lower swing low. That section of the chart is the first point in time that price is going down. When price is making high highs, high lows, we've got low, where the cursor is, low, lower high, higher low, higher swing high. So that also is the first point in time that price is going up. Low, lower high, higher low, higher swing high. The alternative bias change is on the breach of a previous swing low. So again, following the sequence on, we've got higher low, higher high, lower swing low. So on the breach of a previous swing low, we can trade the first pullback. So the two bias changes are high, higher low, lower high, lower low sequence for shorts, and high swing high, lower swing low, also for shorts. And obviously it's just the reverse along. So two different bias changes based on how the chart unfolds. Basically the key is the higher swing high or the lower swing low. When you start to see high swing highs, higher lows, it's going up. Lower highs, lower lows, it's going down. Or when price is range bound, just where the cursor is now, just very quickly to wrap up, we've got lower swing low, lower high. Price is making higher low, lower highs within the previous swing high and the previous swing low. So that portion of the chart, price is range bound. So folks, basically it's either going up, down, or sideways. Any questions? Any questions at all? There is an article on my site with videos. So if you didn't get this on the first pass through, this is one of those things. The trending side of things is usually pretty easy to see. Usually, it's where people stumble or get stuck on is the turning point. When does it turn from long to short or from short to long? So if you follow that link on the that I've just put in the room, there's an article that goes through everything I've just talked about. There's also several videos that you can watch in your own time. You can watch them repeatedly. So if you want to watch them, please feel free to. A couple of last questions. Mike, again, well done on the pound yen. Sorry, how do we enter? So the entries. So for example, you've got the, just to pick one quickly at random, you've got the higher high, lower low, lower high. So for trading purposes, excluding the fact this is a 240-minute chart, I'd use this for a bias change. lower low. So basically, your higher low, higher high, lower swing low. When you see that lower swing low, if price goes below that lower swing low, then you're looking for shorts. Now, for trading purposes, I would enter below the lower swing low, and obviously vice versa for longs. Thinking about the full price change, we've got the high, higher low, lower swing low. Again, where the cursor is, if price goes below that lower swing low, the entry for me is below the lower swing low, and just the opposite for longs. So how would I enter it? If I was trading on the lower time frames and I was using the same pattern for an entry, the lower swing low for shorts, the higher swing high for longs. Dan, depends what time frame, it depends what pattern set up, but basically my lowest entry time frame, as I mentioned earlier, is the 89 tick chart. I'll trade the 89 tick chart. If you don't have an 89 tick chart, a 2 or 3 minute chart will do you just as well. Do we use pivot points? No, we don't. And to be fair, as you saw earlier, that 4 chart layout, that's all I use. Just price action sequence, fib retracements, tool, and horizontal support and resistance. That is all I use, folks. But apart from that, folks, that's me done. That's the price action sequence. We also took a look at perception of reality and how to avoid our perception of the facts. Deal with the facts. Try and push that perception that what I think might happen. Separate what you think might happen from what is actually happening. Follow the 3 basic questions. Where's price now? What's it doing? Deal with the facts. The price action sequence will help you with the facts. Is it going up, down, or sideways? And then you can move on to the last part of the 3 questions, which is how can I get involved relative to your strategy? That's the time to think about what might happen next, but always deal with the facts first. What are the facts? Is it going up, down, or sideways? If it's trending strategy. If it's ranging, apply a ranging strategy. Very simple. Thank you very much, folks. Thank you very much for your time. Thank you to FX Street. And if you've got any questions or follow-up questions, please feel free to just contact me through the website.